Rudy here, 14th November. Welcome to the end of week review of the tank, MVR. If you're new here, welcome aboard. You'll get familiar with the tank and ninja analogies as we go through. So the key reason why I think this should be your core portfolio for the next 10-20 years is because of this thing here. So for old subscribers, it's always good to reinforce. So this is the commodity cycle back to the 1800s, up and down, and we just happen to be at the bottom of one now. Now, this chart here, this is a live version of it because they don't have one going back to the 1800s. So this little bottom here is this chart here, which is the Bloomberg Commodity Index. And if you're a chartist, you'll see that's a cup and handle. And you can see we're now just starting to break out. So we're just at the beginning, it's not too late. So that's the core philosophy, is this commodity resource boom we've got going for 10 plus years. Okay, so this is the tank, MVR. So just a brief overview of who he is. So there's 31 companies, mining companies. Last year distribution was 4.8, and for those fee-conscious people, 0.35%. So you can see, 7%, 6% weightings to BHP, Woodside. And as we'll go through the charts of these, so you get familiar with what's under the bonnet. And we go down, so we got like Genesis, Capricorn, they're 2%. So as we go through them, the weighting gets smaller. Okay. So I'll just go to a weekly chart. Okay, so this is the tank, and just from some perspective, this is a new one for new people. Why a lot of people aren't even focused on resources. Like even these guys, Van Eck, that's who do this ETF. They're out there promoting this VLUE ETF, outperforming the NASDAQ. Well, as we'll go through, I'll show you that this MVR is outperforming the NASDAQ. Is outperforming value. So he officially became the tank on the 4th of August, and that will become clear in a few more charts. So the tank had a pretty good week. This is his growth for the week. And another interesting stat for you. So in terms of FUM in this ETF, there's $500 million of FUM in the tank. Okay. All right. So what I like to do is start off with some benchmarking so you can get a feel for, if you're sitting in one of the popular ETFs, how does it compare against the tank. So this is VAS. So there's $22 billion of FUM sitting in VAS. So that's where everyone's got their money. No one's talking about resources because it hasn't boomed yet. So this is VAS, and that looks pretty sick to me. Without the resource sector, this would look a lot worse, because our banking sector outlook is flat to down, our tech is a sell, our listed property is a sell. So the only thing holding this up is resources. Hence, why invest in it? Why not just go for resources? And so how do we do that? So this is you take the chart of MVR and you divide it by the chart of VAS. So this shows the outperformance of MVR, the tank, over VAS. So to put a number to it, so it's like a 22% outperformance. And VAS is the same as A200 or IOZ if you're sitting in that as well. Now to get because we don't have a lot of data going back since 2014, to get a longer term picture, I use the XMJ, which is the materials index, which is a proxy for MVR. the difference is that XMJ is more overweight BHP, but it gives you a better picture of the long-term game here. So this is the XMJ over the XKO. XKO is basically VAS, or the ASX 300. Okay, so when it's going up, materials is outperforming the ASX index, and then vice versa. And then materials outperform, and then vice versa. So we're now entering this phase of materials outperforming the general share market. You can see this is a big squeezing wedge, or a flag pennant pattern, which breaks in the direction of the prior trend. So this is just setting up for one big outperformance, in my opinion. Okay, so VGS, that's another popular ETF. So that's fine, it's hanging at its tops at this stage. If we do a ratio of MVR to VGS, so since the beginning of the year, you would have made more money being in MVR. This is that value, VLUE, that they're promoting. And you can see here MVR, so even the product provider doesn't even know what they've got under the boot. This is MVR over IVV, outperforming IVV. MVR over Qual, another popular ETF, MVR outperforming. MVR over NDQ, the Nasdaq. I've been calling it a draw for the last, well, ever since I started the tank. Actually, I should say that's when I started. I started the tank officially back here in August, when he started outperforming VAS, because I couldn't say anything here because it was a draw. Sorry for that divergence, but that's why. I was doing ninjas before the tank. So MVR looks like it's now going to start outperforming the Nasdaq. MVR over VDHG or DHHF, they're the same. It's been kicking its ass. So there are all your popular ETFs, like core holding ETFs. I have ninjas which outperform MVR, but they're a different risk reward thing, which if you're new, you'll get a you get a understanding as life goes on. Okay, so let's look at who's under the hood, under the bonnet. So before we go through the company, we go through the commodities. So this is the copper price. So long-term picture. We're squeezing up into a nice pennant here to break upwards. And another reason why commodity booms and busts occur, this is a good example, because basically when prices are high, everyone mines it until there's too much of it, and then the price of the commodity collapses. And this is the copper deficit for 26, 27, 28. So basically there's a shortage of copper being built up here. So there's not enough, there's not going to be enough copper, so the price goes up. It's iron ore, which is a big, I don't expect much out of iron ore, just for it to trade sideways. But that doesn't matter because our companies still make good profit. Okay, so BHP's the biggest weighting in MVR, so he's basically copper and iron ore, and he hasn't done anything. So the tank is working from people underneath him doing the work. So once BHP gets a wheel on, then that will give another gear to the tank. The oil price. So again, oil price, we're at the bottom of a cycle. For existing people who watch the Daily Ninja Show, we saw the big whack down in oil. I wasn't that concerned, and it's bouncing back up. Again, I still think long term we're at the bottom, rather we're not at this stage of the cycle. Natural gas. So natural gas has been on a roar. Hopefully the Liberals can do something about their energy policy and switch to something a bit more reliable like natural gas over those solar windmills and whatnot. Anyway, get on focus, not political already. Okay, so natural gas looks great. So who mines that? Or this guy, Woodside. He's my retirement stock, 6.5% or 6.4 now. He was 7.5% down here when we had him as a buy. Anyway, fully franked dividend. He could pull back, but he's a tank, so he's the second largest holding. Okay, the gold price. So a big holding in the ninjas. So this is USD gold price, all-time highs here. We had the big correction, consolidation upwards. Again, I still think we're still at the beginning, but again, we're investing in miners, not actual gold price. And gold prices at these levels, even if it consolidates, our gold miners are still undervalued. So that looks fine. Gold in Aussie dollar terms, so that looks good too. So the holding, third largest holding in the tank is Northern Star. It's our biggest gold miner. So it's had a good week, chugging along. So the next highest weighting is Fortescue. They're that's not true. So they're basically a pure iron ore player, so it's going to track the iron ore price. So it pays 5.5. So you can see the tank before, it does pay a decent dividend. It's not just a growth thing. Rio, so he's iron ore, aluminium and copper. So he's doing fine. Then we've got Linus. So Linus has been whacked. So even though Linus has been whacked, the gold miners have come up. So they all sort of help each other out. They have good weeks and bad weeks. So Linus, I've been saying it's a buy. It's buying at these levels. Evolution, so they're a copper gold miner, looking fine. Origin, so they're just chugging along there, doing their bit for the team. Santos, so Santos is like a Woodside, oil and gas. So they're a buy now this week. So they've still got a lot of room to go there. Okay, next commodity is aluminium. So aluminium is broken out of its resistance here. Zinc is breaking out. Lead breaking out. Silver. So for usual viewers, so my favourite Ninja ETF is actually made up of just silver miners. So this is its all-time highs. Once it breaks here, she's going to the moon, this one. So why do I show them? So South 32. Now silver is these guys are basically lead, zinc and aluminium. But silver is a byproduct, so it's not really a silver stock. Anyway, South 32 looks great. There's that flagpole, there's your consolidation, break in the direction of the prior trend, so good buying at these levels. Orica, so they're in the explosive business, so they're ripping, looks great. Ramelius, so they're a gold miner, so they're fine. And as I said before, with gold prices at current levels, these guys are still undervalued. So there's plenty of. It's not like you're buying into the top. Okay, so this is the lithium priced. So used for batteries, battery storage. So Pilbara Minerals. We've been buying this thing all the way. Buy the dips is the theme. Actually, I should just in saying that. If we go back to MVR, it doesn't go up in a straight line. So this is a daily chart. So we had some people, that bought in here, and then it dipped down here, and they're panicking. Then, what do I buy any resources for? But then had some subscribers. They bought this. So that's when it drops, you buy. That's basically the mantra. So nothing goes up in a straight line. So if we measured, so if you happened to bought, had your day where you bought MVR there, it dropped 5%. So if you're going to buy the tank, it's like even now, if you bought it right now, it may drop 5%. So you're better off waiting to buy on down days. In the long run, it won't matter. I just had to get that disclaimer out the way. So next is Worley. So they're a global engineering company. I think they're good buying there. Ampol. So they're doing their bit. Perseus, so they're a gold miner. Okay, so then we've got coal, dirty coal. Anyway, it's at resistance. So I think once everyone works out, they need some backup baseload power, gas and coal. So who we got in here? Whitehaven Coal. I'd rather they had a different coal stock, but you can't pick everything in an ETF. Anyway, they're doing fine. Looks like they're due for a bit of a pullback though. But again, a big long-term trend happening there. Mineral Resources. So they're mining services, lithium, a bit of iron ore. They sold part of their, if you didn't know, they basically sold a chunk of their lithium business. So that's what has given all the lithium stocks like Pilbara a big jump. Korean company wanting to shore up their supply of lithium. Anyway, these that's what happens. Genesis, so they're a gold miner. Capricorn, another gold miner. Sandfire, so they're predominantly a copper miner. Very nice consolidation. I don't think the next move will be down. I think the next move will be up. Horizon, so they're a rail freight operator. Dyno Noble, so they're in the explosive games again. So they're looking fine. Big, you see that's in the last boom what happened. So again, still at the bottom. We've got Regis. So they're another gold miner. Aluka. So they're sort of a rare earthy type stock. Come down to support. So you can see the rare earth stocks, Linus and Aluka, they're having their down period at the moment. While gold stocks are having their up period. But it will reverse. Uranium. So this is uranium spot price. Just been consolidating at these levels here. So why do we show that? Because of palladium. So again, palladium I think is good buying at these levels. So uranium has come out of favour for now. So again, these are the boys that, like if gold takes a breather, then probably these guys will take over. Monadelphous, so they're mining services. That's giddy up. Now obviously as we go down here, like if MVR was full of Monadelphous, obviously the chart would be a lot different. And that's where the concept of ninjas come in, because as we start looking at gold stocks, uranium stocks, there are ninja ETFs that just have all gold stocks, or all uranium miners, or all silver miners, which will outperform the tank, but they'll come with you need to accept a bit more volatility, which I'll get to at the end of this piece. Beach, so they're oil and gas producer. Liontown, so they're lithium. So they're all the lithium stocks have got a bump this week, and IGO. And then we wrap it up with DRR, so they're a royalty company. Take a clip of BHP's iron ore money. Alright, so that's the tank. So now we'll go through how the tank and the ninjas all fit in. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is what type of attack will I do. That basically depends on, do I want the riches in the castle? So basically if you say yes, you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay. Alright, so you decided you want the riches. So the plan of attack, you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. Alright, so the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, your gold miners, your silver ETF, your copper miners, your small companies ETF, like a defense tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US based ninjas. So these are which you can't get on the ASX, so these guys do a bit more of a powerful job than the ASX ones. So we've got a rare earth ETF, a uranium ETF, but these are the large caps, these are the medium cap uranium miners. SilJ, which is your silver miners, you get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF, you get a bit of lithium in there, but you get more depth. So in here, for example, in XMET, you might get one or two companies in lithium, whereas in here you get about 30. Okay. Alright, so what percent of tank and ninjas should I use? Alright, well, so ultimate risk, like game on, I'll take anything. Alright, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, a week one of those ninjas could drop 10% in a week. Let's just set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk, okay? So that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash. But that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, so you've got to sort of work out your risk profile there. I don't want to be given personal advice around, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make at least 10-20% per annum. A lot of them are up all that in 6 months. But it's nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you've got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? Well, I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies who'll pay you, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. All right, so that's just a framework. And each weekend I go through, I do a video on the dividend shares and ETFs, and I do a video on all the ninjas. All right, hope you enjoyed that. Let us know your thoughts. See ya.